Hi, and thanks for tuning in today. My name is Matthew Atkins. I'm the Senior Financial Advisor with Clearbrook Investment Management and also a National Social Security Advisor certificate holder. But today I'm not here to talk to you about Social Security. I'm here to talk to you about the Washington Cares Fund. Originally, this was called the Washington State Long-Term Care Trust Act. It was passed by our legislature in the spring of 2021, and it will go into effect in January of 2022. And it will impact every single employee or worker who has W-2 income in the state. There is no way around it unless you opt out, and they have given some opt-out provisions, which we're going to talk about, because you need to consider the impact of this tax on your own budget and on your own life. Now, there's good reason for why they instituted this tax. They're concerned, like many other states are, with the aging population and the rising cost of healthcare. You might say to yourself, well, I'm not sure I'm going to be impacted by this. Well, the reality is 7 out of 10 of us will need care at some point in time in our lifetime. And if you're a woman, you could be on average in that care for 3.7 years. And if you're a man, for 2.2 years. That's not because men are healthier and need less care. It's because women tend to be better caregivers. And so, men don't end up going into a care facility quite as early or stay quite as long as women do. Very unfortunate, but it is an actual reality. The average cost of that in-care facility expense is about $97,000 a year. Now, that actually goes up to over $130,000 in Seattle and other places, but on average on the state, it's still a $97,000 cost per year. And if you think Medicare is going to cover that cost for you, you're really wrong. Medicare does not cover long-term care cost in terms of the residency cost. If you have to go on Medicaid, that is, you have to go on the state aid program, guess what? They're going to require you to draw down your assets. You get to have $2,000 in your bank account. You can have a home and a car, and that's it. Otherwise, you can't have any other assets. And so doing nothing about this tax is really not the answer. But you should consider alternatives because the state has given us an opt-out provision. And so let me just talk a little bit about that opt-out provision and why you might think about it. Number one, the tax might go up in the future in the state of Washington. There's no guarantee from the legislature that they're not going to raise this tax. And by the way, that tax is 58 cents per $100,000 or $100 you earn. And so if you want to calculate how much your tax might be, just take your annual income and multiply it by 0.0058. So annual income times 0.0058, and that'll give you a look at what your tax will be. You pay while you stay, but you lose if you leave. The state benefit is not something you can take with you. So you might pay into it for 25 years, but decide you want to retire in Arizona, and guess what? You don't get to take that benefit with you when you leave. If you happen to be getting close to retirement within 5 years, guess what? Too bad for you. You don't get the benefit, and but you still have to pay the tax. The total lifetime benefit that the state offers is $36,500, which we just talked about the average cost of care at $97,000, so it's a fraction of the total cost of care. And the reality is that there are better options available, and that doesn't just come from people like me. It comes from the very actuarials that the state contracted to evaluate their program. They said approximately 45% of state residents, representing 75% of our wage base, could receive comparable coverage on the private market for equal or less money. That's the state hired actuarials who said that. So let's talk a little bit about what that real cost might be. And I'm going to use a very, very popular person here in the state of Washington. That is our own Russell Wilson. And Russell's going to have to cook like crazy in order to afford his long-term care costs according to the tax. Why? Because, well, here's a chart. If you make $2.5 million, your tax is going to be $14,500. Well, Russell's going to make $35 million in 2022, and out of his check, he's going to lose $203,000 just to this new tax. Now, I don't know if you can imagine those kinds of numbers, but here's the reality. Somewhere on this chart, you're going to find yourself. And the real question is there a private option that's going to give you more benefit for less money? That's the question you have to answer. Okay, so when you think about comparing the Washington Cares Fund with private options, let me just give you a few things to think about. The portability out of the state of Washington, can you take it with you? The Cares Fund, no. Private insurance, yes. Do you have coverage outside the United States? Cares Fund, no. Private insurance, yes. Ability to adjust your inflation protection. If healthcare costs continue to go up at the pace they have been, then even the $36,500 the state offers is not really going to touch those costs. So with a private insurance, you can actually create your own inflation rider that says, I want it to grow by 4% or 5% a year. So you can't do that. Elimination period options. So elimination period has to do with the time that you need to start care and the time that you actually get covered for that care. There's only one option in the state program. You can adjust that with private insurance. The ability to cover partners and spouses. Let's say you have a partner or spouse who doesn't work and you do, you're the primary breadwinner. You're going to be paying into the tax, but guess what? There's no provision to also put them on that program with you. Whereas with private, there is. Cash benefits, the ability to have cash in your hand for cost for care that you're taking care of. Private insurance gives you that cash benefit in many cases, and Washington Cares program doesn't. Return of premium option. There are return of premium programs within long-term care policies that you can actually get your premiums back if you don't happen to use it over a particular period of time. And then the last big thing here is level premiums for life. Washington Cares Fund has no guarantee they're not going to raise the tax. And if your income goes up, you're just going to pay more tax. So if you have two things going on where your income's going up at a rapid pace, let's say maybe you bonus out $1 million or $100,000, guess what? You're going to pay the CARES tax on that. And they may be raising that CARES tax in the future. We have no guarantee that they won't. So what are you going to do? Well, I'm going to give you one quick contact here, and that is you can go to www.longtermcaretax.com. And you can find on there all kinds of information about the long-term care tax, and you can also request a quote from that site. Again, longtermcaretax.com, and you can go on that site, find out what you need to do, and then submit a request for a quote, and we'll get back to you as quickly as we possibly can. Hope you have a great day. Talk to you soon.